Today's data shows that some of the economy is slowing down a little. That's our topic for today's Backstage Pass. Well, hey friends, hope you're having a great day so far today. Stocks are down sharply. Mortgage bonds are up just a little bit here as we head into the late afternoon session. Mortgage bonds are up about 8 basis points at the time of recording. They're testing the high point that was set back on December 2nd, and that's kind of set the ceiling of resistance. And mortgage bonds have kind of tested that ceiling of resistance a couple of times and come off of that. So that high point again that was set on December 2nd has formed a nice ceiling of resistance for bonds. If we break through that, there's definitely a lot of room on the upside for mortgage bonds. The 10-year yield, well, that's definitely below the 100-day moving average. It's down 5 basis points today, and there's some room to go on the bottom side for the 10-year yield. So yield is moving in the right direction, mortgage bonds are moving in the right direction, and well, that means that mortgage rates are moving in the right direction. Yesterday, the national average for a 30-year conventional fixed rate mortgage came in at about 6.27%, landed right where we thought it would. And today, based on market activity, we do expect more improvement in mortgage rates for today. So good news out of mortgage rates. And look, coming off of a better than expected CPI report and a pretty major Fed meeting the past couple of days, it feels like, and it seems like the mortgage bond market, the bond market specifically, is kind of settled into a feeling that, hey, maybe inflation is tracking in the right direction. They feel like, inflation is starting to go in the right direction. And the data today that came out, economic data, really kind of reinforced that position. So two indexes that are for the month of December, the Philly Fed Business Index and the New York Fed Manufacturing Index, both of those were in the negative area, and both of those were worse or lower than what was forecast. So these indexes kind of are a real-time feel for how businesses and manufacturing feel the economy is going, feel their pipelines are going, both showing negative signs. And retail sales, well, retail sales for the month of November, well, that was down as well, and that was worse than forecast also. The only data point that came out today that did not show really any signs of slowing or was, the other side of the forecast basically was jobs. Initial jobless claims came in at 211,000 for last week. What was forecast was 230,000. So, really showing that the labor market is being that sticky point in the economy that the Fed is really starting to pay attention to, and that kind of reinforces again some of that talk that Jerome Powell had yesterday at the press conference that, hey, we feel like inflation's going in the right direction, but we don't think, the Fed doesn't think there's going to be any meaningful movement in inflation until wage growth comes into a stable pattern where they want to see it lower. And so again, the labor market is kind of where the Fed is starting to turn their focus. Now that's all the news that we have for today. Remember, stay positive, have a great rest of the day, and we'll see you tomorrow.